Okay. All right. Hello, hello. We'll just wait a couple minutes to give everyone a chance to get in. Hey guys. So I'm gonna try to read the comments off of my tablet. So let's see here. Let's see if I can do that. We'll just give everyone a couple minutes. Oh, thank you, Coleman. Appreciate it. All right. Congrats, congrats. Thank you. Thank you for joining me. For those of you that are just getting in, we're just giving everyone a minute just to get in the live stream here. So, okay. Let me mute this. Okay, so how's everyone doing? Can you hear me okay? Let me know if you can hear me. I have this door open because I have the river right behind me, so I thought it would be cool, but if it's too loud, I can shut the door. So just let me know. Sounds good? All right. Loud and clear, pretty serene. Yeah, you know, it's still getting into the spring season, of course, so it's obviously not going to look the most green, but loud and clear, yeah. So, but it is pretty. It's the Snake River. All right, 22 people. That amazes me. Hello, Kenny. Hey, Nicholas. How's it going? Oh, really quick. I got a package the other day, and it had a bunch of different things in it and flips, which I've never tried until I tried the vanilla ones that they sent me. So whoever sent me these, thank you so much. I just had a congratulations thing about my channel and everything like that, and it was from St. Louis, but there's no name or anything. So, and I looked all over the box, but there's just an address. So whoever that is, I sent you a thank you letter. So let me know or message me and let me know who it was that sent me these. Thank you so much. All right, so where's everyone from? I think the last Washington, all right. North Carolina, Wisconsin, London. What time is it in London right now? Hey, what's up? Wow. Illinois, Chicago, Miami, another London, Canada. All right, just up to the north. 1 a.m. in London right now. Well, we all appreciate you being with us. Illinois, all right. Hey, is it true? Do you guys really get mad when people say Illinois? Or do you just look at them and say, oh man, they don't know how to say it? Argentina, wow. Alaska, all right. SoCal, Virginia, Gunblazer, welcome back, welcome back, welcome back. So I thought I would give you guys a gift for everyone who joins the live stream and everyone who emails me within about 3 hours. Hey, what's up? Within 3 hours after the live stream, I want to give everyone a chance to get it. Russia, wow. Love from the UK. You know, I've never been to the UK except for just, just touchdown at the airport. I'd love to go there. But so what I'm going to give to everyone, thank you so much for the support. I mean, 10,000 is just crazy. It's just amazing. So thank you so much for the growth. What I want to give you guys is the digital version of this, which is actually really, really interesting. And it has a lot of the stuff that I've used in my videos, but there's so much more in here that I haven't shown you. So what I'm gonna do is email everyone in the that has joined the live stream tonight a digital copy of this. And what's really nice, talks about the principles of consistency, and yeah, actually closer to 11K. What has the greatest impact on investment results? And what's nice is, so here's the slide, and then on the back it has, you know, it explains what you're looking at, and so it has a bunch of different sections here, you know, different things about avoiding market losses. The herd is often wrong, right? And this is an awesome thing. I don't know if you guys have seen this, right? So when there's a sale in your favorite department store, you run to it. When there's a sale in the market, you know, a lot of the herd mentality says to run away, when really, just like Warren Buffett says, that's when you should be buying, when there's fear. So that's an interesting one. And again, what's nice is there's an explanation on the back. So all sorts of stuff that I'm going to send you guys. Again, the PDF, the digital copy of this. But yeah, so on and on and on. Maybe we can pick some cool ones to go through. South Africa. All right. Welcome, welcome, welcome. 49 people. This is crazy. What's the email? Okay, so I actually just got to this hotel. I've been running around crazy busy. I was going to set up a landing page just for this, but go ahead and email me. Just email me, say, hey, can I get that thing you mentioned in the live stream, just the PDF. My email is KennyRobinsonChannel@gmail.com. And if you don't want to remember that or write it down, just it's in the about section of my page. So what's up, Kenny, watching from Waikiki Beach? And there's another one that just said Hawaii. Wow. Waikiki, a little bit sunnier in Waikiki than here, I assume. Awesome. But yeah, so just email me, and I'm going to send you guys this as a thank you. It's kind of a larger file, but as a thank you for just, you know, supporting me, joining in on the conversations. And it's really, really interesting. It has investment themes, macroeconomic views. So there's a ton of really interesting stuff that has inspired a lot of videos on my channel. Let's see, correct spelling, Kenny Robinson Channel. Yep, just Kenny Robinson Channel @gmail.com. Hi, watching from Southeast Missouri. Whenever I think of Missouri, I think of, oh, maybe that's not the right state. Correct me if I'm wrong. Ozark on Netflix, that's in Missouri, isn't it? Maybe not. So yeah, again, the reason why I love this so much is because it really takes the complex parts of investments and puts it into really interesting visuals, which for me, I'm a visual learner. The giant fox, that's right. Yeah, you're in Hawaii. Thank you. Yeah, perfect. Okay, excellent. So yeah, so anyways, email me if you want one of these. It's really awesome. And that's just a thank you to you guys for everything that you've done for me. What's up, Kenny from Fairbanks, Alaska? Kenny Robinson, Kenny Robinson Channel @gmail.com. Kenny Robinson Channel, yeah. So I'm gonna work on these live streams. I wanted to try and get to where I could read the comments on my tablet here, but I just didn't have a second. Thank you. Yeah, I didn't have a second to get ready for the live stream. I literally just walked into this hotel about 2-3 minutes before I signed on here. So so yeah, and again, thank you for whoever sent these to me. That's awesome. Include your name next time so I can thank you out here publicly, unless you don't want me to. Would you do a collab? Yeah, email me. Sure. Yeah, it's just Kenny Robinson Channel. Also, another announcement that I wanted to make, and I wanted to give everyone a couple minutes to get into the live chat here, is I've been receiving a lot of emails in my Gmail account, on Instagram, even in messages here in the comment section about specific things with your portfolio. And whenever I have a minute, I try to send those out and help you out with your portfolios, as well as for those of you that emailed me, I usually give a pretty detailed answer, because investing and things like that is something that I'm passionate about, and I'm going to continue to do that. And a lot of people have asked me for, you know, just different, you know, if we could have a phone call and things like that. I'd love to schedule that. But in addition, what I'm doing is I'm currently and some of you know this because I've reached out to you. Some of you that have other channels, I've reached out to you for input and advice. I'm building a complete investing course that I'm gonna have. Yes, okay, so I'll answer that question in a moment. Remind me, because these comments, they pop up and then they disappear. So I'm building a complete course that I'm going to have available at some point in the future. I'm not going to set a date. I'm not going to rush it. I really want it to be an excellent, excellent course for people to be able to use and go through at their own pace and really enjoy it. So that's another thing that I will be doing. Where do you purchase Noble? Can't find any decent brokers. That must be, you must be out of the States, because you can purchase Noble in the States on any broker. So that must be out of the States. But so there was a comment talking about UK based. Yeah. M1 is great, but I don't think they have M1 in the UK. So there was a, what was it, a pro share or not? So Noble is pro shares. How do you like Webull? So Webull is it's nice for traders more so. M1 is great for, I think, passive investing, because you're not worried about execution time with M1, right? So when you place a trade, it doesn't go through immediately. It's not really meant for exact, people that want exact pricing. And really, you can't expect that when they're giving you everything for free. So we've really gotten kind of spoiled here in the US with all the bells and whistles that these online brokers give us, and we really don't pay very much for it. So we're pretty fortunate. But there's let's see, I use Webull for, see, swing trades works better than Robinhood. Webull actually reached out, and this is another thing that I actually am really happy to share. So, and someone brought up collabs, which is not related to this comment, but there's been a lot of emails from people. Some of it has been scams, and some of it has been legitimate companies that say, hey, we'll sponsor a video, we'll, just talk about our product, or we'll give you a free trial, and if you like it, do it. And I'm fine with doing that if it's something that I believe is excellent, really, really good, something that I'll use, because, here's the deal. It's not worth the $500 payday if it's going to devalue my channel and the community, right? I'd much rather be in it for the long term than say, oh, thank you for the $500, but then I just look like I'm up here promoting something. So I want you guys to know that whenever I do talk about a product like M1, I love M1. It was actually suggested by a subscriber to do a dividend portfolio, and it's just been the funnest thing I think that I've done as far as different investing platforms, and I think it's great. So that's why I use that one. But you mentioned Webull. They reached out to me offering me all these different things to sponsor events, and I think they're great. It just doesn't really fit with the channel. It's more for trading and that type of thing, which is great. It just doesn't make sense for the channel, so I probably won't do a Webull account. But I don't think there's anything wrong with them. So, and then that question about the ETFs, that high dividend versus Noble, those are both great ETFs. They have great holdings. The difference in those ETFs is Noble is the only pure play ETF that covers the S&P 500 dividend aristocrats. So that's the big difference. I have a Robinhood is great too. I just don't use it on this channel because it's not really applicable to what we do. So, but I don't think there's anything wrong with it. So, and then also I want to continue my Investing for Beginners playlist. I have yet to film, I think it's video number 3 or 4 that I have to do. Acorns. Acorns is great for people that want to build up a nest egg passively, almost out of sight, out of mind. Hopefully I keep looking in the camera. I think it's right here. I have to remember that. TD, IRA account with being American born? Is it possible to have an IRA account without? No, I mean, you can be born somewhere, but you have to pay taxes here, I believe, and be a citizen to have an IRA. Ally Invest is good too. Yeah, there's a bunch of different awesome platforms. Just because I don't mention them on my channel doesn't mean they're not good. USDV covers top 20 as opposed to Noble's top 25. Yeah, and so there's some different ones depending on which country you're in. Dollar cost averaging doesn't make sense. It does for me. I do that. Robinhood. Oh, are you saying you don't understand it? Okay, I thought you meant you understood it, but it just doesn't add up. Yeah, I can talk about dollar cost averaging. I really need to figure out a way to get the comments to where I can read them because they pop up and they fade away when I'm in the middle of one. So dollar cost averaging, and Acorns essentially does that. So what Acorns does is you link your debit card. Would it make sense to just invest in a 401k IRA or just sit in stocks to get $1 million goal? Combination of both. So I do both. I have my IRAs and my Roths, but some years I can't contribute to them because there's an IRS income limit. And then I do have a company that I put money into, a simplified employee pension, a SEP. It's kind of like a 401k, but a little bit different. The employer puts some matches in. Philtown. Yeah, Philtown's a great one. Hey, Kenny, please do a video about the whole process involved in buying a rental property. Details about all the... Okay, so excellent question. Hey, Barbara, welcome, welcome. So here's the big issue with going over every single detail. After I uploaded my mobile home video just a few days ago, I had a ton of people reach out to me via email, which I love. I might not get to it immediately, but I love it. Hey, buddy. So with shiny object, I mean, that's what they are, shiny objects. I think it's a gamble. I don't think they're good investments, but you know, if you have a little play account and you want to do that, that's up to you. So a lot of people reach out to me saying, Kenny, what is the A to Z process of doing a rental property or mobile home or any sort of real estate deal? Ameritrade is expensive. I don't find it expensive. They have no annual fee. Yeah, if you want to buy an individual stock, I think it's $6.99. And they have a whole list of commission-free ETFs and everything. So it's very, very cheap. Like I said, here in the US, we're very spoiled. We don't like when we have to pay a few dollars, but when you think about it, there's probably people right now watching in countries that have zero support as far as platforms, or if they do have a platform, they don't have any options with it. So we really are very fortunate with all the different platforms we have. We're a little bit spoiled. So A to Z on the rental properties, the issue with that is I'm not an attorney. So if I put out a video and there's little technicalities, I can get myself in hot water, even if I put disclosures. That's why you see in my videos, I never say, hey, you should buy this stock today. You should do this. I always say I own it or I'm considering it. You can consider it if it's right for you. So I have to watch what I say, especially with like rental contracts. Another thing why I don't do the A to Z details is because it's going to be different state by state. And so even countrywide, there's going to be differences, not to mention people in Canada want to watch it and there's going to be stuff that's just not applicable. So I'll go over the numbers and you know, and people ask me, what was in that binder that you displayed in the video? And, you know, and I can talk about what that is, but it's going to be different state by state. So I'd rather not waste a whole video talking about different contracts that may or may not even be applicable to you. Leverage is a big no, in my opinion. Yeah, leverage is like playing with fire. And the problem with leverage is the problem with really any sort of instant success. So, for example, if someone begins day trading and they win a couple times, they win big in the beginning, they get cocky, right? They think that they've figured it out, but really they've just gotten lucky. We're all guilty of it, right? It's the same reason why people buy scratch tickets. Whenever there's a chance of something positive happening, people tend to throw logic out the window. Think about it this way. You know how we always hear, don't text and drive on your, don't text on your cell phone while you drive, you're gonna get in a wreck. And people all over the country every day get in massive wrecks, unfortunately, because they're texting on their phone. But all of us, right, I'm guilty of it too. I say, oh, can't happen to me, can't happen to me. But then we go buy a lottery ticket and the chances of winning are 1 in, a billion or whatever it is. And people say, oh, you never know, I could win, I'm gonna go buy one. It just doesn't make sense, right? So there's a lot of that type of thing. So when you use leverage in an investment, the issue is yeah, you can win big, but it can also go down the drain really quick. I buy stocks while I drive. Please don't do that. So yeah, that's the issue with leverage and playing with anything that's extremely high risk. But if you have all of your retirement accounts maxed out, you have a massive emergency fund, you really have all your investments and insurance in place, I have a Play account that I buy certain things with that's fun, but I don't expect any sort of results from it. Can you talk about using margin money, or would you not use it? I don't use margin money. Rental properties are hard in Los Angeles. Yeah, everything is hard in Los Angeles. It's a beautiful place, though. Every place has its give and take. I was just in San Francisco. Those of you that follow me on Instagram know I was in San Francisco. I made a video about it. Beautiful place, beautiful water. Went across the bridge there, and I love visiting there. But I would never live there. I mean, you have to plan your life. You have to plan your day around traffic and transportation, and I'm just not a fan of it. But a fun place to visit for a few days, for sure. LA is the same way. Love LA. I'll fly in there, spend a weekend or two, but I wouldn't live there. What percentage for gold and silver? So a lot of you know that I own gold and silver, and I've been meaning to do a video on it. Hey, Kenny, thank you for the thought-provoking content. Thank you, Greg. Thanks for your support, always watching. I really appreciate it. I see your name a lot in the comment section, so thank you. So what I think about gold and silver, what state do I live in? I have properties. That's funny too, actually. It's funny you mentioned that. I got a letter from another person from YouTube at one of my rental properties. So somehow they looked up my address. And just so you guys know, my name is on a ton of different addresses. So if you send it to those, it'll probably go to tenants. So please don't do that. I appreciate it, but send it to the mailing address that I have in the video descriptions. But I primarily live in Idaho. So, and then the question about gold and silver, I maybe own 1 or 2% of my overall net worth in silver and gold. And here's the reason why. A lot of people say, oh, it's a great hedge against inflation. Well, sometimes. There's also periods of history where it was completely uncorrelated to that. So that's not always the case. Idaho is beautiful. It's just barely starting to green up. If I was doing this a month from now, it'd be a completely different look. So just got to give it a little bit of time. But so it's not always a hedge against inflation. Additionally, the issue with gold and silver is there's always more and more of it available because we're mining more and more of it. We're getting better at doing it. And the reason why it's worth money, the reason why gold and silver is so valuable is because you can go trade it in or sell it for actual dollar bills, currency, and go and spend that currency. And so a lot of people say, well, you know, if we have a major economic collapse, oh, thanks, Martin, appreciate it. If we have a major economic collapse, the issue with gold and silver is, you know, if you're in your house and you have, congratulations, thank you so much, Adam, really appreciate your support. Awesome, thank you so much, and seriously, you guys are awesome. We're in Idaho. I live, so you're way up north. I'm down south. Sandpoint's beautiful up there. I love driving through Coeur d'Alene area. It's really green up there. Yeah, so, and the issue with gold and when people buy it for economic collapses and say, oh, well, this is going to save me, or the dollar is worthless. The dollar only has perceived value, right? It's not backed by anything. Well, yeah, it's just a piece of paper, but gold is just a shiny rock. It only has perceived value. So you can't eat it. It's not going to feed you in a time of crisis. It's not a gun. It's not going to protect you. It's not a shelter. It's not going to put a roof over your head. So what's gold going to do for you if we have an economic collapse, right? So if you have a $40,000 box of gold and you go up to someone and say, I will trade you this gold, all this massive gold, just give me that gallon of water and loaf of bread. What are they going to do? They're going to say no, because at this point, it's just a shiny box of rock. So, you know, gold doesn't produce anything. It doesn't, you know, it just sits there. It's pretty, it makes good jewelry, and I like it, and it's fun, and I own it. But, I mean, as far as, like, people buying gold to get rich from it, or buying gold thinking that that's going to be their saving grace, it's not realistic. In history, yeah, gold is used in electronics, silver is used in a lot of medical devices, but again, what is that going to do for the average person holding it? So yeah, in teeth, there's some uses for the metals for sure. But it's just, you know, when you buy stocks, you invest in people, you invest in innovation, you invest in human capital, ideas, you know, economy. With gold, you just own, you own a shiny rock. So I own some, I like it. I'm going to continue to buy it just because I think it's a fun hobby. And it's one of those hobbies where it's like, I could buy gold and silver and it's fun for me to, you know, follow and look at. I did enjoy my dividends rolling in this month. Or I could have a hobby like motorcycles where it's going to cost me money. So at least I could sell my gold or silver and it'd be fine. But as far as like people buying it thinking they're going to get rich, like gold IRAs, there's much better investments for IRAs. Did I find a cheaper hair product? I didn't. I need them to email me for a sponsor. All value is relative. You can invest in tree bark if people want it. Yeah, I mean, if there's a huge demand for it. But yeah, so that's my thing with gold. And it's funny because with gold and silver, there's a cult following with it. And so it's kind of funny because I own it, right? I own gold and silver. So I feel like I'm free to have a strong opinion on it. But it's kind of funny because I'm not going to drink the Kool-Aid and say gold and silver is the best and it's going to be around forever and ever and ever. It will, but it doesn't mean it's going to do you any favors. So sometimes people that own a lot of gold get pissed off at me. Hey, thanks, Giant Fox. Thanks for stopping by. Appreciate it. So we'll see you next time. But I panned for gold actually in the Snake River right behind me here. So yeah, not in this part of the Snake, way far away. But I like gold and silver. I just don't think it's cracked up to what people think it should be. And it's not going to do anything for them. But I'll probably buy more. Yeah, I did see Fords rise this week. I bought some at like 12, and then I bought some when I made that video. So, yeah, I like Ford. I think it'll do well over time. And then someone asked me about the CVS merger, and are you wearing a Rolex? No. You know what's interesting about this watch is it's actually, everyone thinks it's a lot more expensive than it is. It's they don't make it, it's a 2011. Let's see, there it is. It's a Citizen, and I love Citizen watches. Funny story about this watch is I just bought it. This is the second one I got. They don't make them anymore. They quit making them, but there's still some available. And I lost this watch at like 3 in the morning. Thank you. Yeah, I love it. Please touch on that. Yeah, okay, Jonathan. Yeah, you were asking me about that. I'm gonna mention that. I lost this watch when I was in Bangkok, like at 3 in the morning. Don't ask me how I lost it, but I just couldn't find it. And economics equals behavior. Finance equals knowing which behaviors are productive. Yeah, economics is the study of humans. That's what it is. Are you going to do more M1 videos? I will. Yeah, I love M1. M1 is a lot of fun. Great watch. Thank you. So I have watches that are about 10 to 15 times more expensive than this. But it's funny because I get the most compliments on this watch. And I don't know if I don't want anyone to devalue this, but I paid $140 for this watch, which that's a lot of money, but compared to other watches that you can buy out there that people perceive to be expensive, I mean, this is fairly reasonable. So I lost this watch, and it really upset me because it was one of my go-to watches. And so I said, I'm not gonna buy another one until I accomplish a task or a goal. So I just sold that one mobile home. I went out and bought a watch. So does that watch cash flow? No, it's not an asset, but it keeps me on time for things like this. So it's definitely not a cash flowing asset. I'm out early, 2 a.m. Shoot, lost that one, but thank you so much. We'll see you later. Thanks for stopping in. I'm calling 100K by 2020. Wow. I'm going to continue to do YouTube while I still have time. And I don't foresee myself running out of time for a very, very long time, if ever. So stocks are high right now on my low, no yield stocks I've sold. Man, I really have to figure out how I can get comments on this so they don't disappear. I want to make sure I don't miss anyone. So that CVS merger, I own Walgreens. Let's see, do you have a video course on when to buy a dividend stock? I'm going to have a whole investing course coming out soon. It'll talk about different timing and when a good time to get in. I started with Robinhood, so now I'm torn. Well, Robinhood is a decent app, so I've heard. It's not bad to have. A few. Do you read a lot of investing books? I do, mostly on flights. Motion rewind watches are better. I'm sure there's a lot of better watches than this. It's just a Citizen Eco Drive, so it's nothing fancy. I like it. I'm happy with it. With that merger, do you use any technicals? I do use some technicals. I can talk about those, Greg. Remind me. My favorite watch now is my Orient Mako XL. I'll have to take a look at that. I like watches. I mean, it's just nice because as a guy, when you're in a business suit in a business meeting, you know, you're not feminine, you don't wear jewelry. So nice little pieces like this to go on along with the suit. It kind of completes the look. Do you think Fidelity's website is a mess, like 3 different versions glued together? The only Fidelity website I've looked at is the United Kingdom one, the UK one. I'm actually helping a friend of mine now through that process. He reached out to me for some mentorship, so I'm helping him get signed up with them. So, but I own Walgreens. As far as that merger goes, I own Walgreens. It's a dividend aristocrat, and I really like them. So I think they're going to get a run for their money in that space. But I like, what books do you recommend? I will let you know in 2 seconds. The Intelligent REIT Investor is a great book to read. The Intelligent Investor is one of my favorite books. I also read Confessions of a Street Addict by, oh, his name slips in my mind, Jim Cramer. Do you prefer Vanguard? I love Vanguard. I love Vanguard ETFs. And I mention them a lot in my videos. They're great low cost products, but I think Walgreens is going to get a run for their money, but I'm going to stick with Walgreens. And I also own Pfizer. When it comes to the medical industry, I own LTC, which is long-term care REITs. I think that's a great one. I also own ticker FBT, the First Trust Biotechnology ETF. That is one of the most volatile holdings that I own. And it's funny, I talked with a representative of First Trust, and he said, you know, Ken, you're a younger guy. You have the time horizon. You know, this could make you rich over the long period of time. I own it. And I said, yeah, I'm thinking about picking some up. And it was really interesting. I got to speak with a lot of them about it. And so, you know, you look at the average annual rate of return on that's been like 20%. It's just an interesting one, very volatile, but that's money I'm not going to touch for, you know, several decades. So if you are allowed to only own 3 blue chip stocks, what will be your preference? Can it be ETFs? That would make it so much easier. But if I only had to choose if I only could choose 3, I would want to make sure to, you know, any good dividend stocks in India and Africa. So for Africa, there's a holding company which owns the largest cement company in Africa, which is interesting. But those are very, very emerging economies. There's not a lot in them. So if I could only own 3 stocks, I would want to own holding companies like J&J is essentially a holding company because their businesses are spread out among all sorts of different markets and different products and services. Also, even though it doesn't pay a dividend, stocks like Berkshire Hathaway, again, because the one company represents a bunch of different underlying companies. Yeah, Berkshire. So if I only could own 3, I would own the holding companies because you get diversification through their subsidiaries. So J&J, I guess, Berkshire, and maybe like 3M or something like that. So I really can't imagine a nightmare world that I would be living in where I could only own 3 different investments. That'd be a nightmare I'd want to wake up from. So. So thank you so much for all the emails I've been getting, a lot, which has been nice. Yep, the Dangote Group is a dominant, that's a cement trade. Yeah, that's what I was talking about. In fact, the owner, the founder of that company was actually at one point, and he still might be, the richest man in Africa. So I think that's his last name too, Dangote or Dangote. He's the richest person. I think he's worth like 3 or 4 billion US. So that's obviously a ton of money, especially for Africa. So those were the only ones. And then did you say India? Is that the other country you mentioned? So India is an interesting one. People call it the next China. Yeah, there you go. Aliko Dangote. He is still the richest 10 billion. Okay. Berkshire ever do a stock split? You know, there's one that's like, there's the A shares, I believe they're called, that are about $250,000 a share, last time I checked, or maybe more now. And then there's the B for all of us normal people that don't have, you know, that amount to put in one share of one company. So do you think the Apple REIT is good dividend stock? You know, I haven't really looked at it that much. I think I own one. I own part of that in an ETF. Recently, Munger said diversification is for suckers, hence only 3. There's a book for for only owning 3. And if you look at when that book was written, you only need to own 3 stocks. That was before we had a global economy and many more different things that have been integrated right into our economy. Now something, if someone sneezes in China, it can affect the S&P 500. 50 years ago, it wasn't that way with global trade, global business, global trading, global commerce, things like that. So that book is a great book. And, oh, you only need to only own 3 stocks. Well, yeah, that was true before color TV came out, right? So there's some things that, while there's some good solid investment principles, you have to make sure they're applicable to the current times. So you mentioned before that you hold about 3,000 stocks, very diversified. Yeah, so in fact, what was that video I was just doing where I own actually 8,000 stocks? I own 8,000 in my M1 portfolio through the ETFs. So that's what I mean by that. If you own SPY, the S&P 500, you obviously own 500 different stocks. So a lot of us own more stocks than we even realize, right? We own companies that we don't even know about. So, loaded question. How did you learn so much about stocks and real estate? By doing a lot of it, by losing money with it. Am I good at softball? That's a funny question. I don't know if I'm setting myself up for something by answering that. That seems like a loaded question, not the other one. Probably not. I don't know. I don't play it that much. I like baseball. I watch a lot of baseball. Yeah, so hopefully that answers your question. Do you have any interest in or experience with alternative investments, self-directed IRAs? Actually, I do a little. I have a self-directed IRA. And I do some mobile home work in it sometimes. So like all those gains and stuff, if you do it in a self-directed Roth, pretty cool. You don't pay tax on any of that. So that's always nice. So how long have you been into stocks and ETFs? Where did you get the capital from? So check out, and I'm going to answer your question, but for the full explanation, check out my interview. It's in one of my previous 5 or 6 videos. It talks a lot about where I came from, what I did, but I started I started working when I was 14 and a half at McDonald's. There's a video on my channel about that. And I've had a job since I was 14 and a half. I saved money like crazy. My first investment ever, my mother helped me with it. It was the it was the TIAA CREF. Thank you for the great content. Thank you. I hate baseball. You know what? I got hit in the face today. I can only on one side. Man, that sucks. I was driving one time and I was driving by a baseball park and one came over the fence and landed right in front of my car. I love going to casinos only to people watch. I don't play. Maybe blackjack, but I rarely play. But anyways, where did I get the money to invest? I worked a ton. I always paid for all my own vehicles, my own school clothes, everything. And not because my parents couldn't, it's just they wouldn't. And then I joined the Marines right out of high school. Hey, Mike. That was my first job too at 14. I don't think they allow that. It's interesting. I don't think they do, but they didn't look at my birth date. And then they even told me, they said, hey, just to let you know, we wouldn't have probably hired you, but I just assumed you were 16. I glazed over your date of birth on the app. So that's funny, Mike. And I appreciate your support. Thank you so much. Him and I are active in the Facebook groups as well. But yeah, so I started investing a ton. I had a ton of side hustles. I invested some of my Marine Corps money, which was really nice. And then essentially, and this is where I tell people, yeah, I made some right moves in my early 20s, but myself and a lot of you, we have all been the beneficiaries of a decade-long bull market. So really, it's been fairly easy for anyone that has a pulse and some money to place money in an index fund and get rich over the past 10 years. And then consistently taking risk, not bad risk, but concentrated risk. And so there's a lot more details in that interview. And as I upload more videos, you'll learn more and more. Just a month ago, no one knew that I did mobile homes and real estate. So, as my channel develops more and more, I'll share more and more. Difference between IRAs and self-directed. So an IRA, you tend to only be able to buy traded securities, stocks, bonds, things like that. With a self-directed IRA, you're able to place like tangible real estate. Like you can buy a rental home in your own hometown and place that inside your self-directed IRA. You can buy collectibles and things like that within your IRA. So they're only good for people who have traditionally maxed out their other investment opportunities. You know, if someone is just getting into investing, I wouldn't say start out with a self-directed IRA. It's just not really the best route. But that's the difference. They're also a lot more expensive as far as administrative expenses because you're having to place, you know, certain documents and draft those up and place those and, you know, have a custodian, a self-directed IRA custodian, you know, keep track of all that and document that. But they are out there for you. So hopefully that answers your question. And again, thank you for whoever sent me these. Hopefully you're watching. I know I've mentioned that a couple times, but thank you. I appreciate it. No one put their name on it. So is that you, Barbara? Good quality REITs where you can get 8 to 10%, not unless they're private. I mean, you can get REITs that'll pay you 8 to 10% in the stock market, but they're not good ones. Generally speaking, there's going to be one person that freaks out over me saying that. But generally speaking, no, unless you go private. So speaking of that, by the way, I'm a girl on my dad's account, BRB. I'm going to go on Graceland. Gladstone Land. So property managers, like finding a good one is like seeing a unicorn. So that's an interesting one. Now, I don't really like, so I have a couple. I don't really like them. I mean, I've been very lucky to get good tenants and I pay for background checks, credit checks. And I really, you know, I'd rather have the home sit vacant for 2 or 3 months while I'm screening tenants than, you know, get someone in there immediately and have them be a nightmare. So there's been times where my rentals have been vacant for like 2 or 3 months, when, you know, just because I'm not going to just rent to anyone, because all it does is I'd rather pay 3 months of mortgage on that rental than get someone in there that's just a nightmare. So it's just not, I mean, you know, there's a certain point where, yeah, this investment brings me a lot of money, but it also, you know, causes me stress and headaches. So you have to, I manage my own, but I only have 2 of them that are rentals. All the rest I just flip. So, shoot, something came up that I missed it. So for REITs, 8 to 10%. So I own a private REIT. It's called, they own the brand of storage units. It's called SmartStop Storage. And it's a company out of, I think it's Laguna Hills, California. And I went there, met with the president, and I decided to become a partner in that. And what we do is this a guy that flips mobile homes? It is. I mean, I'm not the only one that does it, but I do it. There's a lot more successful people doing that than I am. But yeah, I do that. So with storage, we go around and we buy up mom and pop storage units, usually from the kids that inherited it from their mom and dad. They really don't want to run it. You know, it's really only like half occupied. And so we buy them, we come in, we upgrade them, and we have the national pricing data, so we know what's competitive, and we're able to run them at a 40%, as low as a 40% occupancy level and still remain profitable. So, you know, that's somewhere where you could get 8 to 10%, but that's private. So you'd have to find a licensed broker to buy into that. So hopefully that answers your question. 70 people are watching right now. That's amazing. And so in the beginning, and for those of you that just joined in the beginning, I liked this time and my first time live streaming, I always like to ask where everyone is from. It's interesting because sometimes I fly right into your city. So it's always interesting to know when I fly in, oh, hey, you know, there's someone from our community here. I subbed and liked the video. Thanks, Graceland. Appreciate it. What's your biggest income? Private investments? Shoot, I missed that, Kevin. So my biggest income is all of my active income. the things I do daily. I do some consulting. I own a holding company called Blue Sugar Holdings LLC. It's an Idaho LLC, and I own a lot of different subsidiary operations that I manage day to day. So there's Seattle, great. I was born in Federal Way, so just outside of Seattle. Michigan, outside Flint, awesome, Jonathan. Thanks for your thoughts. Oh, okay, yeah. Mesa, I love Arizona. I was thinking about buying something in Scottsdale, like a condo, but I think Las Vegas is where I'm gonna go. I'm waiting for a real estate crash in the Vegas area. And then I'm gonna buy it up. Buy. Colorado, Orlando, very cool. I love Colorado. I love flying. I'm going into Denver later this month. I just got recommended on YouTube. What do you do, Mike B? Well, welcome, Mike. I do all sorts of investments, dividend investments, a lot of passive income investing, a lot of real estate, a lot of stock videos. So if that interests you, definitely join the community. Houston, Denver, awesome, yes. So I do that, smoke some weed in Denver. A lot of people do there. Paradise Valley, Arizona, that's kind of a beautiful area if I remember right. So that's what I do day to day. I just take care of different things at my holding company that I started, and then of course I flip mobile homes. My goal this year is to do one a month, but a good deal has to come up, and right now there's a lot, and I just haven't had the time for it. Okay, cool. Yeah, North Scottsdale, awesome. I love going to Scottsdale. Beautiful weather, beautiful women. Amazon is coming to Northern Virginia. So Northern Virginia is an economic hub. I was just in Loudoun County. I don't know if you're familiar with that. Loudoun County is the richest county, I think, per capita by income, general income, and like the median income is somewhere in the six figures, and there's a lot of tech companies in Loudoun County, Northern Virginia, and what's interesting about that is about 40% of the world's internet traffic goes through that area, and a lot of that is in Amazon. And there's a lot of major publicly traded companies based out of there as well, so they can be close to all the lobbyists in Washington, D.C. What are your thoughts on the Bank of Nova Scotia? Sustainable dividend, also Canadian banks. Yeah, Jonathan, I remember you had a few questions about those. I really only covered one of those. New subscriber and investor, how do I invest in REITs? So a lot of, and Jonathan, I appreciate those questions. I thought I'd pick probably the biggest one you had that question on was that CVS and Aetna merger. But I do like Canadian bank stocks. I own TD. What was that other question? Oh, how do I invest in REITs? So there's some publicly traded REITs that they trade like stocks that you can buy. You can buy a basket of REITs in what's called an ETF, exchange traded fund, which is spreading your money out. And there's several different types of REITs in all different types of industries. There's mortgage REITs, there's equity REITs. So that's how you do that. Or you could buy them privately if it makes sense for you. So that's how you'd buy one. But most of us just get on to like TD Ameritrade and buy them. Ah, shoot, some of these questions, I'm sorry I missed them. So please ask again if I missed it. So when you want to value a stock, it definitely depends on what you're buying it for and what type of stock it is. You're gonna value a growth. You're gonna look at a growth stock a lot different than dividend stocks. I primarily invest in dividend stocks. So what I look at is dividend growth. Are they increasing their dividend? If they don't, are they reinvesting that money to acquire different things or expand their business within? Because I'm fine with that too sometimes, if it makes sense. Their payout ratio is huge, which is what percentage of their earnings or their profits are they sharing with us shareholders. So sometimes I don't like seeing a stock that is massively increasing their dividend because sometimes it might not be sustainable, and maybe they could be using some of that money to reinvest in existing business operations. Yeah, you want to look at payout. You want to look at their debt. Are they heavily leveraged, right? Their debt to equity ratio, which is their total. You go to their balance sheet like on Yahoo Finance, and you look at their total liabilities divided by their total stockholder or shareholder equity. You look at their leverage. You look at what a lot of the board of directors are doing. Have they been selling a ton of stock? Has no one been buying it within there? you want to look at the short interest. And again, this is all on Yahoo, so anyone can access it. You want to look at the short interest, especially on a growth stock, and the short interest will be displayed in a percentage. And what that says is what percentage of the overall shares available are people using to bet against the company, betting that it will fail. So there's a lot of different things. You want to look at earnings. So I always go to, you can go to Yahoo Finance. I have the app on my phone. And then, when I get really serious about buying it into a stock, you go to their actual website, and there's going to be something above or below that's going to talk about, it's going to say like investors portal, or, investors or shareholders. You click on that. REITs. And REIT payouts are very interesting as well. They're a little bit complicated, but so you want to go to the investors section of the actual website. It's going to have presentations, it's going to have earnings, it's going to have filings like the 10K. And so there's a lot of different things out there that you have to look at. You can look at what analysts are saying. Instead of just looking at what the analyst recommends, whether it's a buy or sell, look at why they're recommending that, because that's going to tell you a lot more than just what a number is going to tell you. Do you own any cannabis stocks? I do. The reason I don't make videos about them, I made one video about marijuana, and I got a little notification on my YouTube channel saying that was now not demonetized, but it was like, instead of the green sign, it was a yellow, meaning it's not red, it's not green, but it's cautionary, meaning it's one of those things that I have to be careful on my channel if I'm going to talk about those things. I really don't want to get a hit on my channel. And I have no issues with marijuana investments or that entire sector or industry. I have no problem with it. I think people should be able to do that if they want, but the problem is if there's enough people out there downvoting the video, flagging the video, reporting the video, it just causes me a headache, and I'm not going to do it. So that's a problem with that. Unfortunately, people get mad that people make videos about that, and so they flag them and report them, and then I see the notifications from YouTube that it's been flagged by however many different groups of people. So I'm not going to mention marijuana investments. Income statement, balance sheet, cash flow, and most overlooked is to read their earnings call transcript. Yeah, I mean, the CEO is in on it. So that's another thing. And you can either listen to the transcripts live, quarterly, or you can listen to the transcripts. You can listen to the audio, the call, or you can read the transcripts later on by going to the investors section of their website. LOL, the weed play is a tricky one. Most banks don't allow you to open an account. Yeah, I mean, it's a whole gray area. And again, I think it's great. It's an evolving, I would own an ETF, things like that, if I was just a brand new person getting into it. What are the riskiest? I mean, the riskiest ones are the emerging ones, but they're also the ones that can make you the most money, like marijuana, for example. Also, marijuana has a lot of political risk, right? Like, we're getting into another election cycle, and here we go again with all it takes is one tweet for a politician to make something go way up or way down. Weed is the riskiest, but, long term, I mean, it's something that's not going away, so, But you just have to be aware of that weed is something that has a lot of political risk, a lot of headline risk, a lot of different things going on. So that's why I love playing those sectors, just buying an ETF. That way you don't have to get lucky with one company. How do you recognize which emerging industry is good? Well, when it's all around us, right? When we start seeing people use it more and more and more. It really depends. It also depends on which country, right? So things in India, for example, India is a massive, massive portion of the world, right? One tweet away from losing money like oil. At least, fluctuating, yeah, for sure. You look at India, that's a frontier economy, emerging economy. A lot of tech companies in India are really interesting right now. India as a whole is slowly emerging. So most of it is very, very, very poor and low income. And what's interesting, though, is as more of those people buy VWO, it's that easy. There you go. Vanguard ETFs are great. So as more and more people come up into the middle class in these emerging economies, especially like India, those types of people for the first time have a little bit of disposable income, and they're buying basic pleasures, right? Especially the younger generations, like gums and chocolates. They love things like that. Those are luxuries, right? Which really to everyone they are, but here in America, we really don't think of it that way. But there's a lot of stuff like that that's really interesting to watch as these economies really come online. So I own some a small cap India fund. I don't know the ticker to it. I think it's a Wisdom Tree one. I'll have to look. It's in my TD Ameritrade account. I also own a lot of India, like an India index fund. It's something that'll hold forever, and I'll make money on it over the years. What are your thoughts on Fundrise? I've never used them, but it's a decent way to get into real estate, I guess. I know Ryan Scribner made a couple of videos about them. I've never used them though. I don't know. There's a lot that I'm doing due diligence on right now, because when I make a video about it, I either want to know all there is to know about it, or I want to be using it, one or the two. And I haven't really done a lot of research on it. Weed is slowly being legalized. You're right. Yeah. So very true, very true. Well, 74 people, 27 likes. Thank you guys so much. If you enjoy my videos and content, I seriously, and I know everyone says it, but if you could like it, it does a lot for my channel. So thank you so much. Definitely try Fundrise. I might, maybe I'll create a video playlist. Thoughts on Vanguard VD Energy? That's another, Vanguard in general is a great way to play ETFs. Is your physical real estate local? It is. Do you foresee Disney stock continuing to, it's fading, darn it. I bought Disney stock at 103 a share after I went there with my nephews and saw everyone spending money like they didn't have to go home the next week to their normal lives and face the music that they're not going to be able to make their mortgage payment because they bought $5 churros and ice cream cones all day, including myself. I was in that line too, buying $5 churros, which you can get at Costco for way cheaper. That's when I bought it. I bought it that night in my hotel because just the absurd, irrational spending that I saw everyone, including myself, I'm in that group too, at Disneyland. I bought it. You know, they have, what's interesting is, I don't know, a lot of you have been to Disneyland, but for those of you that haven't been to Disneyland, even the immediate stores right outside of Disneyland, like gas stations and whatever little stores that are around that whole area, they jump their prices up too. You want to buy a bottle of water in there, you're going to pay out the nose. They raise their prices because they know it's a lot of people on vacation, out of town. They're in the whole Disney mindset, and they're not going to complain about paying an extra dollar or two for a bottle of water. And so it's all just ridiculous. But, you know, wherever there's a willing buyer, you know, I don't see a problem with it. You decide if you want to overpay or not. And so when you're in Disneyland, everyone overpays, including myself. So I bought the stock based on that. That's the only stock I don't think I've ever done research on. Thoughts on BAC overpriced? I think you're talking, oh no, what is BAC? That's not Bank of America, is it? Is it Bank of America? Let me know. I like JP Morgan. What's the other one I own? I own a couple of them. Yeah, Bank of America. Okay. Man, I'd have to look at it. Yeah, they do have high standards. I mean, it's a great company. I lived in Orlando and only made it at Disney once. I mean, I think it's something that everyone should experience, but be prepared to pay. So tobacco is interesting because less and less people each year around the world are smoking just pure tobacco. But, you know, 50 years ago, it would have been an investment to buy. Is it obviously still relevant? Of course. Is it relevant and prevalent? Of course. But it is kind of a dying industry. But a lot of the companies know that, and they're, you know, positioning themselves into other related economies like Altria Group, which I own. And that's the marijuana stock, or the marijuana video I did that I got notifications about, saying that it was flagged and cautioned and demonetized and all that. Mo is a great, yep. Yes, yeah. Yeah, so that's the one, that's the video I did that I got all the stupid notifications for. So, because I looked at it, and because other people had gotten notifications on their videos, and there's literally groups of people out there And I'm sure for all different causes, but there are groups of people out there that are so against marijuana that anything that is published about marijuana, they instantly flag, down like, try to get it removed for whatever reason. And so my little video got attacked by one of those armies. So yeah, no more ads on that one. Yeah, Merrill Lynch is good. All of them are good for the most part. I was originally with Scottrade, and I really miss it. But TD is good too. I like them. Yeah, you know, as far as like MLPs, Brookfield and things like that, the unfortunate thing is you get issued all these K1s, and it's annoying. Probably a pharmaceutical company flagged me. Maybe. Gosh, it's unfortunate. I think, you know, I think it's good that everyone has differing opinions and different views. But, you know, as long as you're not like uploading videos on like hate speech and like terrible things, I think it's ridiculous that some of these videos can get censored like that. 10K, congrats. Thank you guys. And I think I need to talk about that again. I didn't mention it since the beginning of the video, or the live stream here, but gosh, I have to remember to look in the camera. Thank you guys so much. It's really been fun sharing some of my investments and my life with you guys. And I like doing these live streams because it gives me a chance to interact with you guys live and directly, rather than me just uploading a video to YouTube, which is great, and then I see your comments, which is great. But this is really cool because, you know, I try to check my YouTube every day at some point or another, and it just amazes me how it's growing, the feedback I get, the private messages I get, even the letters, even the different things that I physically get mailed. And it's so awesome. And I want to continue to do it. It's been a lot of fun, and I want to continue to add more value, more content, more things to my channel. And you know, I'm not really a sentimental type of guy, but it's really cool. It makes my day when I get like an Instagram message or an email saying, Ken, here's my, you know, they give me a story, you know, paragraph about their life. Here's where I'm at right now. Thank you so much for this or that. It's seriously it's so cool to know that what I'm doing is helping people. And at the same time, it's really been cool because I've had a few emails and even video comments saying, hey, Ken, you're wrong about this, and here's why. And they've, you know, corrected some of my math and things like that. So I really appreciate that too. You know, where I'm wrong, let me know. But let me know by explaining the math on it. Because there's been a few times where I have made a mistake on like the P&E ratio or something like that. And someone said, hey, it's actually this, great video, but it's like this. And I say, thank you. And sometimes I'll pin the comment. So I appreciate you guys keeping me in check too. Because I am human. I'll make a mistake once in a while. So what should I ask for when I send the email? Yeah, just ask for the PDF giveaway. Just ask for this, and I'll send it to you. And I'm glad you brought that up. So for those of you that joined just recently in the live stream, as a thank you to everyone, I want to give you this absolutely free. It's very thick. I'm going to give you the digital version. All you need to do is send me an email requesting, say, hey, give me that what you talked about in your live stream, that panel. I'll know what you're talking about. And I'll send this to you, and it is filled with all sorts of awesome stuff that really, you know, historical context. It takes the investing world and it puts it in almost like a picture book, and it explains it in everyday speech, which we all like. So thick ocean mist. Yeah, maybe I am. Probably need to, well, you know, whoever sent me these, you can thank for that. So they're delicious. So, but yeah, so for those of you that have just joined us, any thoughts on wind and solar? So it's interesting. I like investing in industries that can make themselves relevant without government subsidies. And so if an idea is truly the best route to go, whether it you know, helps make life easier or people it'll do it on its own. But the problem with solar and wind and all that is, in order for it to make sense, in some cases, there's other examples, I'm sure I'll hear about it later on for saying this, but in some cases it does make sense on its own and it's profitable. But in these big things that we see around the country, it only works because some municipality or government entity somewhere is subsidizing it so much that it makes sense to do, rather than run it off of a hydropower or coal-fired plant, right? So until something can stand on its own, it doesn't really make a lot of sense. So that's my opinion on that. But yeah, so there's just different things in here. I feel like the gig economy will be destroyed in the next recession. If you're afraid for your job, you'll be, I don't know. You know, it's been really interesting, you know, with like Uber and all of this like freelance availability. What that has done over the past like 10 years is essentially anyone can hire themselves out for an hour a day doing whatever they're good at, whatever skill they can do, whether it's graphic design, you know, there's like Upwork, things like that. There's so many different freelance services available where you can sign on and be part of the platform, and then they hire you out for whatever little service or whatever little niche that you're good at. So it's an interesting thing. It fascinates me really. But yeah, so please ask me for this in the email if you want it. It's really, really nice. I won't bore you with all the different pages, but you'll like it to go through with it on your own. So, so yeah, thank you so much, you guys. You guys are awesome. So, with that being said, so someone asked me, and someone brought it up here with collaborations, and then people email me sometimes. Have you heard of this person? What do you think about them? Would you ever do a video with them? If you want me to do a video with someone, let me know, but also go, you know, comment on their videos, email them, let them know that you'd like to see that, because that'll get, you know, that'll make it a better chance of actually happening. So what is my email address? So my email address to get that handout is KennyRobinsonChannel@gmail.com. Also, you don't have to worry about memorizing that or writing it down. Go to the About section of my YouTube channel. You'll see it there. Or, well, yeah, actually, that's the only place it is. I was going to say sometimes it's in my video descriptions, but it's not. So you can go to the About section of my page, and it'll be there, KennyRobinsonChannel@gmail.com. And I'll get that over to you for free 99. So what is your take on the infinite banking method? So you're talking about whole life insurance. I assume you're talking about whole life insurance. So, or permanent, I should say. So this one is kind of like the gold and silver comments. Some people get really pissed off. So I believe the infinite banking, and that's more of a specific branded part of the overall concept, right? I believe a certain organization or a certain company has trademarked or really kind of coined that term. But what this individual is referencing is permanent insurance, meaning not term. I should make an entire video about this because it's something that takes probably 15 to 20 minutes to really show you the numbers, really debunk a lot of the noise that you hear. Because it's kind of like gold and silver, where there's a large group of people on the gold and silver team, and then there's a group of people on the no gold and silver team. But there's a lot of, you know, logical reasoning on both sides of the team, and so I think that warrants its very own video. But in short, what it is there's certain products out there, and I own 2 of them for my own. You know, I designed them custom. I'm licensed to do that. But I bought my first one when I was 25, and then I just bought another one because I maxed that one out. But what it is it's a product where you're able to place money inside it, overfund it, so to speak, okay, and it grows tax deferred, and you're able to pull money out tax free. And normally it's indexed to the market, right? If it's IUL. Again, there's a lot that I'll go into, and that awesome. I'm going to do a video on that now, but they call it the rich person's Roth. And there's a Forbes article. If you go to Google and you Google Forbes rich person Roth, it was an article written by a guy that I know named David Ray, certified financial planner, and he wrote all about it. So, but it's not only for rich people, it's really for anyone. And the younger and the healthier you are when you put this product into force, the better it's going to perform for you. The only problem is that I see is sometimes people build it up too much, right? They say, oh, it's the answer, it's the saving grace to everything in your life. Just like any investment, all your money does not belong in it. But there's a lot of confusion and a lot of noise about that type of product. That's why it really warrants its own video. Because, I mean, there's even some famous people out there that talk against it. And it's interesting because I'm in touch with a lot of these major companies that structure these products. They've actually reached out to those influencers, so to speak, that have talked bad about it for years and years, and they've sat down with them and said, "Look at these newer products. Look at how far they've come since the ones that you remember from the '80s." So there's a lot of misinformation out there about the infinite baking system, I'd be happy to debunk those. Stock, SEI, funeral services. Yes, I did a video on that. That's awesome. I love SEI. Are you currently buying at the end of the bull run, or are you saving till crash? I never try to time the market. In fact, that's an interesting one. Sometimes you get lucky. Of course, it's never good to buy at the very top. But let me show you something really quick. That's a great question. Let me show you something in here, and you guys will be able to get this when you email me. And also, whoever asked me that question about the permanent insurance, the permanent products, that's a really good strategy. I use it for my own money, my own wealth. It's just another diversifier. I love it. I've placed one on both of my nephews. I coerced my sister during the holidays to get one because I'm a good brother like that. She finally just signed because she wanted me to shut up. But let me find where it talks about timing the market. It's really interesting. Just give me 1 second here. See, this book is so packed with information. You guys are going to love it. Let's see here. I'll look at it while I answer some questions. DCA is king. Dollar cost averaging is what I think you're mentioning, unless there's a stock with a ticker out there, DCA. I'm sure there is. Pretty good strategy. SPY. Yeah, it is a good strategy for that. So let's see here. Okay. Can everyone see this? Hopefully you can, and you can still hear me. I'm going to try to speak so the mic can pick up my voice, but no one has a crystal ball, but yet often people act as though they do. And what this shows is, here's the people that stay fully invested, and this is investing from, it's like I'm reading in a mirror, but what does that say? 96 to 2016 in, what is it? The S&P, I believe it is. So the people that don't try to time the market and they stay fully invested, they end up making the most money. Now, here's if you missed the 10 best days in the market by getting out and getting in, right? Listening to a news headline, thinking that, oh, the market's going to crash, I'm going to get out. Here's if you missed the 20 best days, right? And on. So if that's really the whole genesis of my channel is, there's going to be years where there's going to be strategic people that, whether they truly are strategic and they made more money than just staying invested, or they got lucky and they made more money. But over time, history shows us that if you stay invested, your chances of success are very high. And then here is the data. And what's really interesting about this is the blue represents the best days in the market, and the red represents the worst days, right? And the shades are in the middle there. And what it shows is some of the best days in 2008 were right before, the crash, or excuse me, some of the best days, or despite 2008 being in the center of the Great Recession, it had 8 of the 20 best price return days for the S&P since 1928. So when people say, oh, I missed 2008 altogether, I got out in '07, well, they missed some of the best days in the market since 1928. So it's really interesting when you kind of zoom out and put it all into perspective. Was 2008 horrible? Hell yeah, of course it was. But, if you're not using your money for another 20 years, it really doesn't matter. And sometimes people get mad at me in person when they ask me, well, oh man, are you worried about the news and the crash coming? And I'm not, because I'm diversified. I had my emergency fund. Anyone, and it's not just me, I don't have some special hookup. Anyone can set up their life and their portfolio to where crashes and recessions don't really matter that much to them. Sometimes people get mad that I'm so relaxed about recessions, and it's not that I love them. It's just I've built my life in a way where it doesn't matter, and anyone can do that. And people say, okay, cool, you have a dividend portfolio that pays you, but what about a crash? Well, I have a system set up to where I'm going to ease off my dividends during that period of time. So again, it's not some special exclusive thing that only I can get. Anyone can do it. I'm probably writing your email wrong. Yeah, just Kenny Robinson Channel at gmail.com. Also, it's listed in the About section of my page there. So, but yeah, so for anyone that has just joined, I'm going to send you guys this book for free. It has all sorts of stuff. And again, it talks about many, many different things. So, yeah. And it is called the Compelling Wealth Management Conversations, because it will spark some conversations. Recessions can be great opportunities to buy. That is exactly right. Yes. So, like I said earlier, I kind of joke about it, but I am kind of serious. If we have another major real estate crash, I'm gonna buy in Vegas. I want a condo there. So I'm gonna shut this door. It's getting cold. All right. What's the one stock you have the most shares of? What is that? I don't know. I have a lot of Realty Income. With ticker on that is O. I have a lot of, you know what it is? I don't have one stock that I have a lot of. Well, I mean, obviously Realty Income and some, but I have a lot of money in SPY, like the S&P 500. I have a lot of money in a lot of like balanced funds. Oh, sorry, I'm getting text messages. So things like that. It's funny, if you there's a video I recently released probably about a month ago. It says something about like retirement investing and cutting through the BS. In that video, I share where a lot of my money is. Work on that cash flow and you will be ready for any market condition. I think great. Yeah. So, yep. Yeah. So I'm reading conversations that people are having that I missed. So yeah, I own a lot of different things, but, I don't look forward to crashes, but they're definitely an awesome opportunity. So now, is it cool that people lose their jobs? No. You know, it's not like I'm like a shark out there taking advantage of things, but oh, okay. Yeah, again, there's some sort of tax conversation I'm missing, but it's a great time to buy in recessions. And again, you know, as far as like job security and things in different industries, that's why I push emergency funds so much. Emergency funds, managing credit card debt. And a lot of people, including my own family, like when I tell them, you know, it's like they say that emergency funds should be my religion or something. Well, I'll stop talking about it when I stop seeing articles from national news headlines saying that only like 30% of Americans have like $500 saved. So I'll stop mentioning it when people actually, you know, you guys are great, but obviously just like the general average person doesn't have money saved. And I used to think it was because they don't have money, but it's they just choose not to save it, unfortunately. So, and you know what's funny is it's almost like in our culture when we watch movies and like I just recently watched that Matthew McConaughey movie called Gold. Who has seen that? It's really interesting, actually. So, do you keep O and other dividend stocks in Roth and taxable? Both. I own them in both. But you know, all of them own that company stock. And Matthew McConaughey's character said, "Put some away, sell some, put some away for a rainy day," and none of them did. And then when it crashed, they were all, you know, disheveled and pulling their hair out. And he's like, "Didn't I tell you to put some away?" And he said, "Oh, I thought it would just keep going up." So it's always been important to diversify, not only asset allocation, meaning allocate your assets within the publicly traded markets, but asset location is important as well. You have some public, you know, you have some stocks in the public markets, you have some non-traded real estate, you have some actual companies, maybe some service type companies that you help, that you know, sell your time to, like my consulting, my coaching that I do for some of you guys that have emailed me. It's always important to diversify your income streams. And then on top of all of that, you want to make sure that you have a massive cash cushion, right? So if all of my stocks, all of my real estate went to zero, No one called me for consulting. My holding company failed. I could live over 1 year just on the amount of cash I have sitting. And again, it's not that it's that big of an amount, but I've just put a little aside every month since, for as long as I could remember. So that's what I want to tell people, outside of, and you guys know this, but a lot of times people say, oh, well, aren't you lucky? It has nothing to do with luck. I just made a decision to put a little bit of my paycheck away. I've never had a crazy, amazing paying job. So, yeah. Best place to park an emergency fund, always an FDIC insured savings account if you're here in the States. Outside of the States, I don't know what version of FDIC insurance or what you guys call it, but I like high interest accounts. So currently I use Marcus by Goldman Sachs, marcus.com by Goldman Sachs. It currently pays 2.25%. And, they don't guarantee that. They can change that at any point in time. But right now it pays 2.25. Ally is another good one. AmericanExpress.com has a high interest savings. If you just Google high interest savings account, you can choose your own, but I use Marcus. It's great, pays me monthly. So helps keep inflation erosion away. So yeah. Is it better to have a plan for investing that interests you? Okay, your message faded away, but I think, yeah, all of those are good. Mike is right. All of them are good. What you were asking, is it better to have an investment plan that interests you or one that you're not in? Well, bottom line is it's very imperative to invest wherever you make money. And then, of course, pick a few investments that you like. Maybe you work for Ford, you want to buy Ford stock. Or maybe you really like Nike, so you want to buy Nike stock. I think that's fine and that's good, especially if it keeps you engaged in your portfolio. But at some point in time, or for a majority of your money, you have to think about your portfolio in a very, and this sounds kind of bad, but in a very cold and non-emotional, almost non-human way. Thinking, I'm putting this together, I'm investing on this based on logic and mathematical sense, rather than, oh, I really like Google, I'm going to invest in them, right? So yeah, invest in things that you like, but you also have to make sure that it makes sense to invest in those. And if it doesn't, have fun with it and then put a majority of your money in things that make logical sense, mathematical sense. You just may think it's a boring investment. Well, does it make money? That's the point of investing. So I have a lot of boring investments, but I like them. And then I take the money and I go do fun things. So I don't really care. So 90 people, 91 people. That is amazing. You guys are awesome. Awesome, awesome, awesome. DCU as FDIC insured. I'll have to take a look at that. I'm waiting for all of, so if the Fed rate drops, obviously those online savings accounts are going to drop too. So keep that in mind. Play the drums on that like a button. Oh, on that like button. I don't know what that means. So it's interesting. I look at my my stats on YouTube, and it tells me a lot about the viewers, like what part of the country, which states, the age group. It's really interesting to see. M1 generates 4% dividend yield. Awesome, Jeremiah. Very cool. You'll have to link your pie in one of my videos so we can all click on it and look at the different stocks. Oh, click the like button. Yeah, go for it. That'd be awesome. I'm not going to beg for likes, but I'll definitely mention it. 51. That works. 51 likes. Who here... Let's see. I try to improve my videos a lot, and if you look at my my earlier videos, they're almost embarrassing. I was thinking about deleting them, but then there's some people that message me and they said, I've been a subscriber for for however long. So it's really interesting to speak with all of you on these live streams, because sometimes you bring up things that I've said in videos that I don't even remember, and so I know you've been around for a while, which is really cool. And then I see a lot of people have said that they're very new to this. So it's really interesting to see all the different feedback. O is great, but up a lot. Very true. Fact. That's a fact. Don't delete them. They're still educational. God, they're so cringy, though. Oh, they're terrible. I am totally new. Barbara, welcome. Thank you so much for joining. Very cool. And I always ask this at the beginning, but where's everyone tuning in from? We had some people from Europe, but it got to be about 1, 2, 3 o'clock in the morning, so they signed off. Um, have you heard of the random stock picking method? No, I haven't. I'd say explain that, but I think I know how it works. Oh, speaking of that, about different parts of the world, could you do a video on what you would have to do to start a REIT? Kevin, so in order to start a REIT, a private one at least, you have to have at least 50 shareholders. So there can be 50 people at the company that own it. The reason that is because it has to be spread out among at least 50 people. In the IRS code, it says that. So you can't be like a one-person REIT. You have to distribute at least 90% of your earnings to the shareholders, and you have to derive at least 75% of your income from real estate activities. 153 stocks in M1. Okay, nice. Yeah, VNQ. Yep. One channel I wanted to point out to you guys. It's a fairly new channel. He's a really interesting guy. Very educational. And he takes a different approach at investing in finance. It's more geared toward like generational wealth and family building. And he's really working hard on his channel. And it's really cool to me to watch that because I know how hard it is to, because, I'm still obviously brand new here on my channel, but it's called Blue Dollar Bull, all one word, no spaces. If you go to YouTube search bar and type in Blue Dollar Bull, his name is Ben. He's from New Zealand, and he's an electrician. So he's very skilled with his hands, very skilled, obviously, which, I'm always envious of when people have those types of important recession-resistant skills. That's a great skill to have in a recession. But he puts out some really interesting content, and he's doing a lot of different types of videos. So I really highly suggest people go check out those videos. Some of you might like them, some of you might not, but he's been putting out a lot of good information lately. So thoughts on Fundrise? I've never looked at Fundrise, and everyone is mentioning that to me. I better take a look at that. Yep, utilities. Yeah, utilities are great. I own a lot of water companies. It's funny because people think water stocks are boring, and they are, to be in all fairness. But what I love about water companies is people don't realize how essential, like what comes out of the faucet is for them. And what I really like is, at least here in North America, we have one of the largest freshwater supplies in the world, right? Us in Canada, think of the Great Lakes. It's some of the largest, if not the largest, freshwater reserve in the world. So we're very lucky in that way. Like right now, China and India are going to war over their water, right? The damming up of the rivers and things there. So water is essential to all of us, right? I think, what is it? We have 96 hours to live if we don't drink water, 4 days, something like that. So I love water because it's very recession resistant. And I'm going to continue to reinvest and own more and more water utilities. Fresh water. The wars are coming. Short-sighted. Fundrise is great. Been with them for more than 3 years. I'll have to check that out. Yeah, so Mike is right. Both of those companies are great. Very good feedback, Mike. Also, Mike, I see a lot of your comments on the Facebook groups. You always have really logical thought out comments. I think you add a lot of value to those groups and this channel, so thank you. So sometimes those groups some people just hop on there and say certain things that make me want to, go hug the person that asked the question and say, please don't listen to that advice sometimes. But a lot of the people in there are good. And Mike, if you ever see Mike's comments, he says some really good logical things with investments. So I always appreciate his feedback. And sometimes what's interesting, yeah, thank you, Mike. And here's what I love is because when myself and Mike, Mike and I, is that how you say it? I'm not an English person, but when Mike and I have conversations, sometimes we'll disagree on little tiny things when it comes down to opinion. And I appreciate that because we can have a discussion where sometimes we do disagree on certain little things. But I see the logic in his comments, which is really cool. I've had Walgreens for over 7 years with no profit. What about the dividend? You don't like that one? Interesting. Can't pull out of Fundrise. So is Fundrise illiquid? Is that what people are saying? Ever going to do a favorite investment books video? I should. That's a good one. That's a good idea. Okay, so I'm going to do a video on the way to grow money tax-free without it being in a Roth, without market risk, and I'll do a book video. Shoot, that question just disappeared. I saw, hey, Kenny, do you? And then, boom. WA, no profit. Interesting. I don't know what they mean by that. Yeah, I'll have to take a look at Fundrise. I don't know. Do not know. Would you recommend taking money out of 401k to invest in stocks for dividend returns? No, I never recommend anyone doing anything with their 401k except buying a well-diversified fund and consistently investing in it. Because you're going to get dividends within those funds. You own stocks within those funds. And 401ks, they're very boring. And it's always awesome to run into people that are very passionate about picking stocks and doing things like that. And I think that's great. Continue to be that way. But 401ks are designed for you to essentially kind of just keep your hands off of it. It's really designed, it's like one of the easiest ways someone can become a millionaire here in America is just have a 401k, diligently contribute to it, at least to get enough to get the match, more if you can. And then always make sure that you don't take actions based on emotion or based on headline risk or anything like that. Just use one of the target date funds and continue to do that. And it'll, you know, it's almost hard not to become a millionaire with 401ks or Roths or IRAs, anything like it's hard not to. So yeah. They have an 8% max. Awesome. Lucky duck. Would you recommend putting an emergency fund into a money market? No, because they don't pay more than what you can get in a high interest savings account. So no, I wouldn't. Sometimes people buy CDs, which is fine, but it locks it up. So I like to call CDs certificates of depreciation. I can't remember who. Oh, you know who I heard that from is, what is his name? He works with Dave Ramsey, former football player. Chris Hogan, is that his name? He titled CDs certificates of depreciation because they don't keep up with inflation, but they lock your money up. So it's interesting. They're not bad. They just, yeah, deep voice guy. Yeah, he's a really nice guy. And he has people call into his channel saying, you know, Everyday Millionaire. I listen to him when I go to the gym. I'll just put on one of his videos. I really align well. Yeah, I really align a lot with what he says. He just gives great, solid, long-term advice. And you know what's interesting about that is it's not always the most exciting advice, right? It's not going to get the most views. It's not going to get the most compliments or comments, I should say. Like the videos that people make that are very sensational about a certain stock or, you know, conflicting thing, that's always going to get the most like hoopla. But sometimes some of the best solid advice comes from someone that, like, you know, Chris, well, obviously he has a huge following, but it comes from just boring advice that has worked, you know, for centuries. So yeah, Mike, they do have a note. I think it's called the Flex CD, flexible CD, where you can place money in and they're not going to slap your hand if you try to get it out within a few months. So that's cool. That's good. Capital Trust. I'll have to take a look at that. And the people recommending video ideas, can you email those to me? I'd love to do them. I just I don't have anything out right now to write with. I work with 401ks, never take a loan, never take an early withdrawal. Exactly. Yeah. I've had people say, you know, I can take an early withdrawal or take a loan and buy this real estate investment. And I always say this, and I mean it with the utmost respect with certain things with 401ks and people taking a loan. If you have to take a loan from your 401k in order to accomplish some sort of goal outside of your 401k, that means you can't afford to do that goal or project, right? If you have to dip into something that's not designed to be dipped into, that means you don't have enough capital to be doing that. I mean, it's just not right. Don't do that. Don't take loans. It doesn't matter if the real estate's a great deal. It's, don't play games with your 401. Be risky outside your 401. Do whatever you want, but let your 401 make you a millionaire in the background of your life. So, yeah, get yourself ready before investing. So, and that's another thing. What's interesting about a lot of riskier investments. So, like, I'll do a risky investment and I'll tell someone about it, and they'll say, "Oh, that's terrible. That's so risky." And I'll say, "Yeah, but it's like not even 1% of my overall net worth, right? I have so much of my money in long-term, well-diversified funds. I have real estate that's paid off, that's just generating cash flow. So if I lost all this money on this one risky investment, I don't care. It's more so for entertainment, right? It's like, well, I can go to Vegas and play craps, or I can put money in this one crazy investment because it excites me. It'll probably either go to zero, which most likely, or it'll shoot up and make me a lot of money." So high risk isn't bad, but you have to be, just how much of your money, how much are you putting down on that high risk? Or a lot of people say, well, oh, high risk is bad. Well, uncalculated high risk is bad, but if you calculate it and you say, okay, I'm okay with losing this, I've made sure to check all my blind spots, meaning what's out there that's threatening this investment that I don't know about. So there's a lot of things that go into that. Do you view your automobile? No, I don't view any car as any asset. Maybe if it's collectible, but a lot of the cars that I drive, I rent them wherever I go. So if I fly into like Dallas for a week while I do some work on my holding company, I'll rent like a Lamborghini, and then I'll turn that in and get a Porsche. It's a lot of fun for me because that way I don't have to own those depreciating assets. So in my daily life, I own I do have a Jag, but I own a Ford F-150. I own a Kia, believe it or not, and then I own a Mercedes, which is very old. It's not valuable, so don't even, it's not like one of those like, oh, cool. So very practical cars. Yeah, you can share your M1 Pi. Yeah. So, do you own any other tangible assets that you would consider an investment? So what I consider an asset is something that either stores value or produces value, like paying me income. So do I consider like precious metals an asset? Yeah, but not necessarily the best one. It's tough to say because there's things that are valuable to me, but might not be worth a lot of money. Anything that's like useful to me it's an asset to me. It's valuable, but so that's kind of like a tough thing to say. Gosh, yeah, that's a tough question. Probably not then. I own my stocks. I own my private investments. I own commercial paper. I own obviously the real estate, but that's only an asset to me if it's producing income. What's your thoughts on commercial real estate? I own commercial real estate through ticker O, Realty Income. Triple net leased Kings. Love that stock. So that's how I own commercial real estate. Yeah. Out of water. Darn it. What's your thoughts on raw land? There's a REIT out there that buys raw land. Raw land is nice depending on what you want to do with it. Own FRT. I've heard that somewhere. I might own it. Like Stag, PLD. Yeah, so I think PLD, Greg, is Prologis. I don't know how to pronounce that. Is it Prologis? They're interesting. They own some warehouses that Amazon leases from them, and they're around the world, which is cool. But I get my exposure to that through O. There's also some prison REITs that own prisons, but those have a lot of political risk to them. Gladstone Land. So I made a video about Gladstone Land. I like them. I own them. What percentage do you have in mutual funds, if any? I own a lot of mutual funds. A lot of my retirement money is in mutual funds. And some of my current income, like my dividend portfolios in some income producing mutual funds. So I own a lot of mutual funds, probably out of my publicly traded part of my overall assets, just out of that slice, gosh, probably half at least is in mutual funds and exchange traded funds. So, because I always like to go by the old adage is like, if you start to think that you're smarter than the markets and pick all your own stocks for all of your portfolio, I just don't believe in that because there's just certain things that that no one understands about the market. And so it's really dangerous. And a lot of times in this industry, when people get together and talk stock, and I see it a lot, I work with a lot of different finance people, and unfortunately there's a lot of like big head syndrome. And they think they're smarter than the market, and it's just not right. So I own a lot of mutual funds because I realize that there's things about the market that I can't comprehend, and I think that's more valuable to realize that than thinking that you can outsmart the market. So yeah. But a lot of my money is in mutual funds. Yeah, Gladstone Land. What is it? Is that GLAD? Or no, Gladstone is LAND, I believe it is. I'm thinking of the mortgage REIT, maybe. But yeah, so there's two different farmland REITs out there that I know of. Maybe there's more. There's Gladstone, and then there's Farmland Partners. Farmland Partners owns a lot of commodities like cornfields, things like that. Gladstone Farmland, they own a lot of like fruits and nuts and things like that, like strawberry patches, almond trees, produce, things like that. And the farms that they buy have fresh well water plumbed in, so they're not what they call dry farms or whatever it is, right? That rely on rainfall. So it's a really different type of farmland REITs, which is interesting. So yeah, GOOD. So I think that's those are mortgages if I remember right. Gladstone Commercial. I think that's a mortgage REIT. It's kind of funny, and I'm sure you guys can relate to this. Like when you get really into investing, Rainier. I think isn't that Timberwoods? They do a lot of lumber. I think I know what you're talking about, Barbara. I think they do a lot of lumber. Yeah, okay. They were purchased by Weyerhaeuser, I believe. Yeah, they're I think they got purchased. I could be wrong. I know that Weyerhaeuser. Gosh, I have people send me messages. Okay, so just to let you know, guys, I am set up to where I can't plug my phone in, and my phone says low battery. So if this cuts out, just know that my phone died. Yeah, WY, Weyerhaeuser. I grew up right outside where they used to be, Weyerhaeuser. And all of our bags at the grocery stores, when it was still cool to have paper bags to where you wouldn't get yelled at for wasting a tree or something, yeah, which is now a REIT. You're right, E. Johnson. All of our paper bags at the stores where I used to live, since we lived right near Weyerhaeuser, they all had big Weyerhaeuser stamps on them, and they were paper bags at the grocery store. So that's interesting. But it's an interesting play. As the world population grows, we're going to need more and more food. So farmland REITs are really interesting. I hunt Weyerhaeuser yearly. Yeah, their land. Okay. I'm down over 10% on ADM in Robinhood. We'll sell it at a loss, buy it back one day. Okay. Yeah, that's the thing. My dividend stocks, people ask me sometimes, oh, this one's way down. What do you think? It's going to be way up, going to be way down. I'm going to own it until I have gray hair and then no hair. So I own it for the dividend. Of course, I want it to stay up. I don't want it to go down, but like Ford or, what other dividend stock. So yeah. Of course, I want them to go up, so I'm with you on that, but I don't care too much about price fluctuations. There's some stocks that didn't lose any money in '08, obviously. We all know that. Like one of them is ticker FLO. I believe it's FLO. Can someone look that up and give me the name of that? Ticker FLO, what is that? It's a bakery company. I can't remember the name of it. Is it Flour Corporation? FLO. They only lost 1% in 2008. I think it's Flour Corporation. Flowers Food. There you go. Yeah. Flowers Foods. Yep. So that's an interesting one. They own they own the market share. They own Wonder Bread brand, which has 98% consumer awareness. Isn't that crazy? They own So Wonder Brand, right? So you can take 98 out of 100 people and show them that logo, and they'll say, "Oh yeah, that's Wonder Bread." So it's interesting. They own like Dave's Killer Bread, which is that organic. They own Nature's Own or something like that. So they have the market kind of cornered on baked goods, and um, the reason that's a recessionary defensive type of investment is because yeah, people aren't going to they're not going to go buy like maybe a new iPhone or like new like material things, but everyone really needs bread, right? Like everyone needs those bakery items. They're fairly inexpensive. They're like a staple of our society. So you're still going to buy a loaf of bread during a recession and shampoo and cornflakes, but you might not buy like the king crab legs in the deli. So that one only lost 1% in 2008, which is interesting. So, and cops still like donuts. Yeah, mostly bagels these days. They told me so. From what I've heard. Um, so with that being said, everyone, I'd like to mention this one more time before I sign off here because my phone's gonna die. So unfortunately, or else I'd stay on because I kind of cleared out my schedule tonight for this. But as a thank you for helping me hit 10,000, all of us as a community, I'm giving this away to all of you. Okay. No ifs, ands, or buts, no catches or tricks. I'm giving this away. Just email me at KennyRobinsonChannel@gmail.com and I will get you guys the digital copy of this. And for those of you that may have just signed on, it talks about like lotteries and it talks about everything to have to do with like different financial terms, talk about different political parties and how it affects the markets. And then right behind it, it has all the explanations. So it's a really cool investing book that talks about all different types of things with investing, right? And I will get that to you guys completely free in an email. Just email me asking for it because I don't have a PDF or a link set up in the description, and I'll get that over to you guys. So just email KennyRobinsonChannel@gmail.com. If you feel like you may have spelt it wrong or you can't remember it or you don't have anywhere to write it down, go to the About section on my channel and it'll have that email right in there. So with that being said, thank you so much, guys. Really appreciate it. It's awesome that right now we have 80 of us, 80 of you guys, right? One of me here. Thank you so much. Like, it's just awesome. I feel like you guys are right here with me in my hotel room and we're just having a conversation. So thank you guys so much for joining me on this live stream. The next major live stream I think I'll have is at 25,000, maybe this year, hopefully, we'll see. But I will do live streams, little live streams here and there, maybe when I'm at a real estate property, or maybe if I'm talking to a friend of mine that does a lot of different investing, or maybe one of his or her companies. So with that being said, thank you guys so much. You guys have been awesome. I'm reading all these comments as they scroll by the screen. Jay Kane's $5. Holy crap, man. It's so awesome, Jake. Really appreciate it, buddy. Thank you so much. You're awesome. You guys, just for the support and the emails and the messages on Instagram and the likes on the videos, and you guys are why I do this. So, I mean, man, awesome. Thank you so much. And I mean, Jake, just the super chat right there, do the $5. That's so cool. I mean, it's awesome that we have this connection of all of us are all around the country and the world. So awesome. Thank you so much. Let's end it with this. Jake, do you have a specific question that you would like me to address either before I sign off or before my phone dies? Thank you, AAGAZ. Thank you so much. Hopefully I'm pronouncing all these screen names correctly. Yeah, it's been awesome. Seriously, guys. It's so cool. It's funny. Sometimes I connect more with you guys rather than, okay. Nah, man, thanks, though. Have a great night. Okay, Jake, just wanted to check. Thank you so much for that. Very, very cool. 10X Academy, Wealth Creation System. You're awesome, man. Thanks for keeping in touch, all the different messages. Thank you so much. Appreciate it. Thanks, Kenny. Goodbye from Missouri. That's right. Or Missouri. Corman, thanks, buddy. Thank you. Do this again, Kenny. This is awesome. Seriously, I have a lot of fun with you guys. It's really cool. So I appreciate it. Okay, well, from there, thank you so much, everybody. I know I've been saying the same thing over and over the past couple minutes, but I truly mean it. And yeah, I mean, Jonathan, thank you. Discord group soon. I gotta check into that. Discord is gaining popularity like no other. Muscles, yeah, for sure, man. Buy from Vegas. Neil, man, I gotta buy a place in Vegas. Waiting for the next crash. Okay, thank you guys so much. Appreciate it. At one point, I'll have to do a live stream like when I'm out with some of my other like colleagues and we're talking about different investments so I can show you guys in person. Don't forget the video on insurance. Email me these ideas. Good night, Kenny. Thanks. Yeah, email me these because I'm going to go get some food. Fan meetup in Vegas. That'd be cool. Seriously, and like I was saying, sometimes I connect with you guys more than I do with people I see day to day. So it's fun. Maybe a live chat group. Asheville, North Carolina. Cool. I have a lot of friends in the South and the North over there. Get a few opinions at once live. I'll have to look into that. The more you guys can give me ideas, the better. Bobby, hey there, Kenny. Hey, buddy. Hopefully you're not just signing on because I was just telling everyone thank you. I'm actually signing off. My phone's about to die, so I'd rather say bye and sign off than have it just kind of click out. But with that being said, oh yeah, shoot, Bobby. Well, obviously there'll be a replay, but it's good to catch you live just for a second, and I'm glad you're here, and thank you for the support. But yeah, so there's a whole 110, almost 2 hours of content for Bobby to watch. So enjoy that if you're interested. But thank you guys so much. My phone's going to die. You are my investing hero. Well, I'm on here because of you guys. So thank you so much. And okay, my phone's going to die. I'm going to get off. We'll do this again at some point. Miguel, that's another. He has a channel, Day Trading Twins. Check out that channel if you're interested in some of the higher risk investing. And thank you guys so much. Appreciate it. And we'll see you guys next